you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Aha. Can you all hear me now? Sorry, guys. DeepFin Crypto Network, can you hear me? Uh-oh. You got me? All right. Perfect. Perfect. We're going to start this over. I'm going to be back in my home studio tomorrow. Hell yeah. All right. Here we go, guys. Let's start this thing from the beginning. Now that we got everybody in here now. How about that?
We did.
Where does it say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
That is certainly a way to think about it. You know what? They say that history doesn't repeat itself, but it often rhymes. I'm going to be showing you some indications that stealth QE is actually underway already, but some things that we haven't seen since 2020, right before we saw the biggest period of expansion in our monetary system. I'm also going to talk about all the things that are coming together. Why 2026, I think we're going to see massive amounts of liquidity enter the markets. Incredibly bullish, incredibly bullish for risk on assets like crypto. But I want to start off with the total assets right here. And this is basically when quantitative tightening began. Okay, so you look at this period right here. This is really 2020. we went from $4 trillion. So this is assets, treasuries that are being held by the Fed here. And then they expanded. They started buying really drastically here, but expanded up to about $9 trillion. In other words, they injected about $5 trillion into the economy over the course of that 2-year period. Of course, in 2022, they started going the opposite direction and starting up quantitative tightening. That's when they were letting that run off the balance sheet. So we went from, $4 trillion up to $5 trillion in expansion. And then they went the opposite direction, going from 9 trillion down to just recently about 6.5 trillion, letting roughly, $2.5 trillion run off in quantitative tightening. Of course, December 1st, just yesterday, was when we had the official end of QT. But there's another aspect to this that they were doing in stealth, and that is through the reverse repo markets. So this is actually kind of acts opposite to what we were just talking about. This is money, and this is something that they really just started recently in recent years. This is money that they were essentially pulling out of the banking system and doing stealth QT, quantitative tightening, to start with. So they went from this period where they had roughly zero all the way up to $2.5 trillion from 2020 to 2022. That is $2.5 trillion they pulled out of the market. So while on one end they were expanding through QE officially $5 trillion, they offset about $2.5 trillion of that through the reverse repo market by pulling liquidity out just from a different lever, essentially. So we did have obviously mass expansion during that time. But one thing I want to call out here is from 2022 up until really November, they were doing stealth QE. So all this money they pulled out of the economy, they were pushing the liquidity back into the economy over the last couple of years. So while we were, again, seeing this runoff of $2.5 trillion here in this period, they were offsetting all of that with the reverse repo market. So we've been pretty neutral, actually, over the last couple of years. But the reverse repo market is now pretty much exhausted. So they can no longer pull this lever. So it should be no surprise, though, because they no longer have this lever to offset, that they all of a sudden just happened to end QT at the same time. Now, here's the issue at hand. We're seeing the SOFR, the SOFR rate, go up quite a bit. So if you look at these on this left-hand column here, let me zoom in a little bit. This is basically the overnight lending rate between banks. So what they do is they can lend their treasury holdings short-term for cash. We're seeing this rate spike, and there's a couple of reasons for this. Number one is during the government shutdown, we saw this general account for the Treasury. You can look at this as like the Treasury's checking account, if you will. They couldn't spend money during the government shutdown. So we saw this balance start to really build up, and it got up to about $950 billion. You've seen now that about 50 billion of that has been pushed out in liquidity since the government reopened. So this caused a little bit of the cash crunch that we started seeing in our banking system. The other major thing that we're seeing, though, is this reverse carry trade with Japan. We're seeing their rates really spike up. Now, the reverse carry trade was essentially entities were borrowing money when rates were really, really low in the yen for basically free capital. They're moving that into US dollars, investing that in real estate and stocks and all types of investments over in the US. Now that this has started to rise, though, their rate, it's caused an unwinding. It's forcing people to sell. This is something we saw in August of 2024. I think this has actually been one of the big reasons we've seen a sell-off in markets over the last couple of weeks. And, when people sell, they then move those US dollars back into the yen. You also have banks and you have investment firms that are strapped for cash, that want to cover their losses and are hitting the repo markets to access capital. It's causing this liquidity crunch. We're having a US dollar shortage right now. And that, in essence, is pushing up this overnight lending rate, okay? Because now there's so much demand for cash overnight. And this has actually forced the government to step in using the repo market. So the reverse repo is something they introduced to pull liquidity out of markets. They obviously pushed that back into markets. This is the opposite. So this is actually just money they're injecting into the banking system. And it is short term. So basically, it's banks that are accessing cash for their treasuries. And it's a short term, solution. Essentially, they're promising them to buy those treasuries back, but it's just, hey, we have a cash crunch right now. We need it short term. Now, it can become stealth QE if we start to see a trend here. And this is exactly what we're starting to see. We're seeing this time and time again now recently. Of course, the reverse repo market, they can't use that lever anymore. You have the cash crunch because the government shut down the Japan reverse carry trade. And now we're having to inject money into our banking system. Now, I bring this up for a reason. Because if you zoom out a little bit, we've seen this before. And as I mentioned, we say history doesn't repeat itself, but it often rhymes. We saw the repo market start to get really drawn on back in 2019 into 2020 here. We're starting to see this trend right now. We haven't seen this for years, okay? But the last time we saw this, well, it really spiked in March of 2020. Guess what else we saw right after that in March of 2020? We saw the biggest quantitative easing event in history ever, right? Right in March of 2020, we saw the Fed expand their balance sheet and inject trillions of dollars, $5 trillion into the markets, okay? And again, this is what we're starting to see right now with the repo markets. Yes, it's a sign of liquidity issues, but it also, if we look back historically, has superseded quantitative easing. So I do believe this is an indicator that, well, they're doing it in a stealth way right now, and it is becoming a trend. I do believe that we are going to see QE start very soon. Now, add the fact that in December, on December 10th, this is about a week away, guys, there is now a 92% chance that we're going to see a rate cut from the Fed. And looking forward, what can we expect from the Fed? Well, we know Jerome Powell's term is up in May. Trump had this to say in his opening statements, in his press release today.
And I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
So Kevin Hassett, guys, and I talked about this a little bit the other day. Right now, he is leading the way, 82% chance of him taking over Jerome Powell's job. What does that mean for markets? Well, on one end, Hassett is not only loyal, but he is dovish. So he is all about cutting rates, about QE, about juicing markets. He's willing to put inflation on the back burner, but maybe more importantly for crypto people, he's just not another central banker. He revealed earlier this year he has $1 million worth of Coinbase stock. His stake could be as high as $5 million in total assets, about $7.6 million in crypto. He also earned $50,000 from Coinbase for being in its academic and regulatory advisory council. Guys, talk about a change of pace going from Jerome Powell to Hassett, who's a crypto bull and a dove. Guys, you don't think that we're going to have massive rate cuts and QE? Come on, man. Now, add the fact that we are about to have deregulation in the banking industry. So there's something called the supplemental leverage ratio, or SLR. This was put into place after the global financial crisis back in 2008. The idea was simple. It was basically to limit the amount of leverage banks could take on, tying it to their capital base, regardless of the riskiness of the asset. But there are some problems here. It meant that the treasury bonds they're holding, which a lot of banks hold treasury bonds, which are very safe, it was looked at as the same as a junk loan. They're treated equally. And it disincentivized major Wall Street banks from holding U.S. treasuries, particularly in periods where there's balance sheet stress, like we're seeing right now, right? Where we're seeing a cash crunch. So this change is going to improve market liquidity, push yields lower, right? Create demand for treasuries, which is obviously coordinated. Like if you have more demand for treasuries, it pushes yields lower. Guys, It's estimated by Goldman Sachs that this could unlock between $5.5 and $7.2 trillion in bank balance sheet capacity. Okay, so you following the trend here? The other thing that's worth noting, the stablecoin market with the stablecoin bill. It's expected that, according to Besant, and there's other estimates that actually could be much higher, that we're going to have $2 trillion or more in demand for treasuries from stablecoin issuers because they have to hold treasuries to issue stablecoins. Okay, what does all that mean? The more demand for treasuries, the more yields come down. Okay, so on one end, pushes mortgage rates down. That's fantastic. Pushes lending rates down. Businesses now can get access to capital cheaper, allows them to hire. If you remember when quantitative tightening first started, when rates started going up, we saw the fastest rate increase in history. We saw a lot of the tech companies lay off first, right? A lot of these companies that had more speculative verticals, well, they had to cut staff, right? They had to lay people off and focus on their profit centers. Now we're going to start seeing the opposite. We're going to see rates coming down. You think about even the real estate market, real estate agents, you have mortgage lenders, all of those jobs are going to be unlocked again. It's massive for the economy. The bigger thing I would say is, guys, as rates come down, people are going to start to look for risk on investments because money markets are going to yield far less. Well, right now, there's roughly $7.5 trillion sitting in money markets. Well, when rates come down, guys, that money is going to start getting dispersed. Okay. And right in time for people to start being able to put 401ks into crypto. Okay. You have Bank of America today coming out and saying that they're starting to advise that some of their clients should be putting money into crypto. They're endorsing 1 to 4% allocation of digital assets for clients. So all this money is sitting on the sidelines, and all of these entities are about to start recommending digital assets for their clients. The other thing is the rebate checks from tariffs. So Trump has come out and said that they're going to be issuing these dividends probably middle of next year, sometime summer next year. Why might that be? Well, guys, we have the midterms coming up in about a year. They're going to be juicing markets. Okay, you start adding all these things up, right? It makes sense. Okay, so we've got a rate cut coming, right? We've got Hassett coming in, who's pro crypto, who's a dub, who's going to be cutting rates. We're going to have quantitative easing. We have all these indicators that quantitative easing is about to begin. You've got deregulation in the banking industry that's going to unlock capital. You have all these moves. The stablecoin bill, it's going to be pushing yields down. It's going to be forcing people into risk on assets. Then you add the Clarity Act, right? You have Bo Hines, you have, Michael Saylor, you have a lot of people that are estimating that the crypto market cap could be growing to between 15 and $20 trillion in the next few years. Things are lining up for 2026 to be absolutely massive. And I think it's super exciting. Now, that's not to say we're not going to have more pain along the way. Obviously, today has been nice. We have Bitcoin. Oh my gosh. Bitcoin back up to almost 92,000. How about that? That's crazy. Now, I think this is worth noting, though. This guy's been pretty spot on. We see a lot of market makers that are, I think, flushing out leverage on both ends. More to the downside recently. More wiping out longs, but he thinks that, hey, 93,000, they can go up and wipe them out and then go back down and wipe out liquidity on the other side. I don't know. I mean, I think we're in this chopping period right now. And it is worth noting, like when we have QE begin officially, it takes time for that to ripple through the economy and find their way to risk on assets. But with all of this lining up in 2026, I mean, look, for the people that think the bull market's over, fine. They're going to have their victory lap. They're going to say, see, it is over. It was a 3-month bear market, whatever. All I know is I expect that things are going to be majorly turned around. And I think liquidity is going to be flowing. You look at Solana, right around $140, still down a lot, but up 10% today. And you have Solana Breakpoint. Solana Breakpoint has always been a major catalyst. And I've mentioned this before, I highly recommend everyone watch those presentations. We're going to have a lot of deep end coverage, guys, I had Daba on. I had a question here about Daba. Yeah, I'm going to talk about Daba. I actually had a space today. So I'll with their CEO, Karam, on my space earlier today. So we're going to talk about that. Actually, let's jump into the DePIN updates, man. There's a few things I'm going to roll through here. I'll probably be posting a lot of these clips tomorrow to X. I've been trying to be better about clipping some of the stuff from my live stream, and it's going pretty well. We have Mike Horden out in India this week. 2.2 million views on this, guys. He's getting eyeballs, man. You also have GeoNet talking about how they are on pace for $7 million in ARR. It seems like every month it goes up by $1 million. Man, they're absolutely crushing it. You have the fact that they're going to have another halving event in June. All things considered, they would be very much net deflationary at this current price. So revenue's going in one way, emissions are going the other way. You do the math, guys. They have very solid tokenomics too. Open market buys, very transparent, and burns 80% of revenue. Rover hitting all-time highs on token burns. Very similar. I mean, they're connected to GeoNet. 60% of their revenue is going to Rover burns and buys in the open market. 20% is going to GeoNet. So Geo is burning from Rover. Rover is absolutely crushing it. And this is all tied to revenue, by the way, guys. Like, this is revenue coming through the door. These are actual contracts with customers buying this data leading to these burns. So love to see that. Honey, we had Hivemapper. It started doing very transparent open market buys and burns. And they're net deflationary in their last period, burning more tokens than new emissions. A lot of their emissions are out of the way, guys. Like token unlocks to employees, to investors are done, right, at this point. So we've kind of hit this neutral period emission. You don't have to worry about a lot of dilution from this point forward. So now it's a matter of, okay, where do we go from here? Hey, they've done a great job with the customers. Love the transparency on the revenue. Really like where things are going from here. I want to talk about Ex Machina. Big deal. And I'm going to spend a little bit of time on this because I think people need to be aware of what Ex Machina is doing. They just announced that they had a raise from Borderless Capital. The Borderless Capital is invested in some really solid DePIN project, but Ex Machina is getting into the robotics space, but they're pooling capital to allow people like you and me to get in with some of the top private robotics companies out there, you know, where we wouldn't otherwise be able to access investment in these entities. Ex Machina is lowering that barrier to entry and allowing everybody to get access into these investments. And these, you know, robotics is the next big move, guys. I think I've covered Brandon many a times. Guys made 9 figures this year, shorted the market when after the Trump inauguration. He's pushing a lot of his money into privatized robotics, especially humanoid robotics companies right now. It's exactly what this project is doing. For those people that don't have, you know, $10 million sitting around to invest, they're getting decentralized access to humanoid robots. So they had several different waves. They haven't had their token launch yet. Wave 1 was with Peak 1.5, though. They raised $500,000. Wave 2, they had $1 million. Wave 3, $4.25 million. You can see all the different investment here. Guys, you don't have to have, I mean, you can come in here with whatever amount of money and you can get access, you can get fractional ownership in this project. And you see here, right now, they're looking at humanoid companies acquiring pre-IPO stakes in the world's top humanoid robot manufacturers. And in particular, you can see some of the things they voted on. It's a DAO, right? So it is voted on before they start to invest in these different entities. Guys, strategic allocation of 1X. They've been all over the place. These are the top robotics companies in the US right now. Figure. I mean, this is a big deal. And again, it's such a cool concept. You pool capital, it gives you access, to those different investments that individuals wouldn't be able to get into. And it's voted on in a decentralized way. I mean, sign me up, man. And obviously all their waves to this point have closed. You can get alerts for their auction, for their next wave that's going to be opening up. So highly encourage you guys to check out Ex Machina, man. I think this is a really cool concept. And when you look at what AI has done the last few years, robotics is next. I truly believe that. And this is one that unfortunately I didn't know about them soon enough. I didn't get in on their earlier waves, but I'm absolutely planning on partaking in the next one when it opens up. Another one in robotics, it's about Aukey. You can right now send them audio files with different shopper questions. They're looking to train their robots. You can earn Aukey for providing training data. So they have their Cactus products, which is actually VR to help grocery stores in different, different locations be more efficient with their employees, essentially. One of the things that came up on their update call recently is like, well, why don't we have a robot do these things? Basically a Cactus robot that combines their current products with a robot. And that is exactly what they're working on. They're working on training robots in a grocery store. So it's a pretty cool concept. Aukey's absolutely crushing it. If it's not on your radar, I've covered it a million times. It should be. Let's talk about Daba Network. Massive update. Over 60,000 hotspots deployed. They're now consuming on the network 1,000 terabytes, roughly every 1.5 days. It is amazing. They had 46 LCOs on board. Those are the local cable operators that are installing for them. Man, they were making waves. And actually, highly encourage you all to check this out. I had my Deep in Connected Space episode 34. We had Karam, the CEO of Daba, on. We asked him some difficult questions, and he, as always, he has great responses. There's a lot of stuff in there that I haven't seen covered elsewhere. Highly encourage you all to check that out, man. But he did confirm Daba's TGE is coming up. It's still on track for December. So keep an eye out for that. Daba's crushing it, man. Absolutely crushing it. You should definitely listen to this space. A lot of questions that kind of were burning in my mind that have been answered now. So feel really good about where Daba's going. Helium. They had some issues with their AT&T connectivity that has been resolved at this point. They have now hit, get out of here, 2 million active users. That's more than most blockchains have combined real users. So 2 million active users on the Helium network every day. They're about to really turn things on in Mexico. Man, crushing it. Absolutely crushing it. And then you've got 375 AI announced their staking program. I was reading through these details. I don't know if this is per person or total, but 6 months staking period, 15% API capped at 1.5 million. I don't know if that's per person. 12 months at 1.25 million, 18 months, 45% APY at 500K each. If that's total, I'm like, man, I'll fill that shit up myself. Like, what? I don't know. I don't know if that's per wallet or if that's total. But all you do is go to their this link here, their foundation website, and you can connect your wallet and you can stake here. So there you go. 18 months, obviously, max rewards there. 45% APY is pretty ridiculous. So that is awesome, man. I posted some stuff on what 375 AI is doing and some major customer announcements that Harry teased. So I should definitely check that post out. I posted a lot of stuff on my X account today. A lot of different clips from some of my recent live streams, some up-to-date news on what's going on. Oh, man. But guys, hopefully I get some clarity on what's going on with the repo market, with the SOFR, with the overnight lending, with QT ending, how we've seen stealth QE for the last couple of years, what we can expect moving forward. We've got banking deregulation coming. We've got rate cuts coming. We've got a new Fed chair coming in May, potentially tariff checks going out. We've got the Clarity bill expected to be passed next year. Projections that we can get to $15 to $20 trillion market cap in crypto within the next few years. Guys, like DeepIn is about to fucking explode. Like, I know the market has sucked, but we are in the right place at the right time. In a lot of these projects we're covering right now, man, I just wish I had more powder to throw into the market right now, because I've been adding, I've been DCAing my positions, but man, I think we are ready for liftoff before you know it. I don't have a crystal ball. Not to say we won't have a little bit more pain first. This market has been super bipolar, but I think we have very exciting times ahead. With that said, guys, I appreciate each and every one of you. Make sure to like and share if you're on X. Subscribe to me on YouTube if you don't already. and I'll be with you again probably Thursday. I'm going to be traveling most of the day tomorrow, but I'll be back with you guys Thursday, if not tomorrow. Have a good night, guys. Peace.